In this video, I want to take a look at mostly the stock market and the correlation to the dollar. So um, we got a daily cycle low here, and we had a bounce out of that. I was kind of expecting that. I was always a bit hesitant to call this a daily cycle low because it did not break the trend line, and it did not rally enough to um, turn the 10-day moving average back up. So this bounce has done that. So this was clearly a daily cycle low. I made a recommendation to get in right in here, and then on Thursday, when the RSI, short-term RSI, got overbought, I suggested that traders might want to take partial or full profits on those trades, just as a precaution that maybe we were still in the declining phase of the intermediate cycle, and this was just a counter trend bounce in a new daily cycle, which would there's the possibility that this is going to turn out to be a fourth daily cycle, and then that cycle will left translate and give us our final intermediate cycle low. So you can see these, here's the first daily cycle. This was the daily cycle low here. Second daily cycle. This cycle tried to roll over and left translate. You can see that right here, and then it was saved by a bunch of central bank QE. And that gives us, the same thing that QE always does. It gives us this big, strong trending move. But those things they tend to warp the market a little bit, and then very often you get some kind of a crash event at the tail end of the cycle, and that's kind of what's happened here. We get this kind of little mini crash here as the QE can't hold back the selling pressure anymore, and then we get a bounce that tries to recover this resistance zone right here, right at about 3,400. A couple bounces, and neither one of them can recover that resistance. And then we get the final move down into the daily cycle low. And now we've got that bounce out of that daily cycle low, but again, we're running into this resistance zone at 3,400. So there's risk that this cycle is going to top right here and then come down and we'll probably bottom. Because I expect this, if this is what's happening, because I expect this to be a short cycle, I would think we would probably bottom, somewhere around the election. That's the obvious trigger event to turn the market, complete the daily and presumably intermediate cycle low, and then we start the advancing phase in earnest of the next intermediate cycle. And because this particular cycle was really long, 50 plus days, the expectation would be that this, a fourth daily cycle, if that's what's happening here, would be kind of short. So I would expect this cycle to bottom maybe in the low 20s, and we get our daily cycle low, and that would fit pretty good with a bottom right around the elections. And then another interesting correlation, and of course these correlations don't always hold. They work until they don't, and it's possible that it could break. But you can see that stocks topped at the same time that the dollar bottomed. So, and we've got this little counter trend move in the dollar, and that has allowed stocks to give us this rally in what I think is probably going to be a fourth daily cycle. So the assumption at this point anyway would be once this little counter trend correction is done and the dollar resumes its intermediate rally, which I think it has to do because it hasn't really broken the intermediate trend line yet. The assumption would be that as the dollar rallies, then stocks will continue to correct, just like they've done from this top here and the bottom in the dollar. So once these larger intermediate trends resume, then the larger intermediate downtrend in stocks should probably resume as well, and I think this will hold for gold also. Gold also had a little counter trend bounce as the dollar pulled back, and I suspect if the dollar this week does manage to break through that trend line and then continue this intermediate advance, I would suspect that gold is probably going to have another leg down into a final intermediate cycle low. So I'm not really prepared to try and call a final bottom in the gold correction yet either. So the bottom line is, I think October is going to be a difficult month to trade. It's either going to give us some kind of a choppy trending move down, or it's going to be, at best, it's going to be a choppy move sideways into the elections. And neither one of those are conducive to being able to make any real consistent money. These are the kind of markets that whipsaw traders, and you just chips away at your portfolio. So there's a possibility of a strong trending move downward. If that does turn out to be the case, you could make some money on the short side, although I typically avoid selling short. It's pretty hard to make money on the short side. But if not, then I think we're in store for just a very choppy and erratic market as we head toward the election. So I really don't expect any kind of a strong, definitely not a strong uptrending market until after the elections. So I think most traders would do themselves a big favor by either just sitting on the sidelines for the next month, or if you just can't resist trading, I would suggest much smaller positions than you normally would use, because there's a very good possibility you're just going to get whipsawed on trades in the month of October.